You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, a program where we break everything down on the futures options side of the fence. We're going to talk the ags, the rates, the equities, the metals, the energy, whatever is lighting it up this week. That's why you have to tune in to TWIFO every week. Listeners, my name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. Remember, multiple ways for you guys to get access to that content, of course, on demand on pretty much every platform under the sun. So if you like to consume it at your leisure on your own schedule, there you go. If you like to get a little bit more engaged, you want to get the live, we have the plus for you. And then, of course, if you want to go live, plus you want to get all the other cool stuff, including all the exclusive pro content, including our great Q&A with Scott Nations earlier this week, I should say, as well as our Options Oddities show every Friday and a whole bunch more. TheOptionsInsider.com/pro is the place to go. So multiple ways for you guys to engage with and enjoy the content. Remember, if you like what you hear, you're listening on your platform of choice, keep rating and reviewing. It really does help all those new folks out there who are discovering the world of options and indeed futures options, helps them beat a path to the door of this show. And of course, we do have to hear from all of you guys and gals out there, so keep those questions and comments coming. Let's see who we're hearing from on the show today. I'm pleased to be joined once again by Virginia McGathey from McGathey Commodities Corporation. Virginia, 2 appearances in about 6 weeks. You must be doing something right.
Well, I'm doing my best.
All right, Virginia, it is time to kick off the show the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything moving to the upside and to the dark side over there at CME Group this week. If you want to see this report for yourselves, we tweeted out the folks over there at CME. Always tweet it out right before the show as well. So if you're not following CME, you can give them a follow. You can see this report for yourselves, or if you have access to the premium version of Quick Strike, you can generate it for yourself. And Virginia, where should we begin our journey this week? To the light side, aka the upside, or to the dark side?
Well, let's talk to the upside for just right now.
You chose the light side, so we shall begin our journey there. Let's break down our top 5 movers and shakers out there at CME this week. Number 5, again, I'll give you a little bit of a hint, listeners. It is a mostly upside, mostly green week. We could put together a bottom 5, but that's kind of about it. Maybe a bottom 8 if you really stretch it out there. So let's go to number 5. Actually, it shows you how optimistic, how much of an upside week it is, listeners. The Russell 2000 is up 4%. It's only number 11, so it's not even in the top 5. Instead, our number 5, our bottom of our top 5 movers, I should say, is Eurodollars, up nearly 7.5%, 7.41%, followed by Brent. Don't get Brent on the show too often, up 7.48%. Before you get all excited, say, hey, let's break down Brent this week. 892 contracts on the tape this week, so probably not going to hang our hat out there in Brent this week, followed by the perpetual mover that is lumber, up 8.5%. And then we go out to energy again to RBOB, up 8.56%. A lot of close races there at the top of the light side there, 8.56%. It was number 1 to the dark side last week, off 9.67%. And it does some paper, around 5,000 contracts. I mean, it's not a ton, but at least it's more than 892. And then number 1 with an aggressive bullet this week, once again, iron ore, up 26, almost 26.5%. It was number 1 pretty much to the upside the last 3 weeks. It was up 20, almost 21% last week as well. And yeah, I know, I would love to parse it. I would love to break it down. Not really an option story to be told out there in iron ore, unfortunately. So it's in a similar position to lumber. It's moving a ton, but not a ton of options to really analyze on it. Let's go to the dark side now, what little there is this week. It's actually a tie for the bottom of our bottom 5 there, listeners. Wheat off 0.79%. Actually, as you know, wheat does some paper, so we could hang out there this week. 60,000 contracts, followed by the peso at number 4, also off 0.79%. And before you get excited, hey, FX, I was excited too, but 215 contracts on the tape this week. So probably not going to hang out in the peso this week. Then we got the Ultra 10-year off 0.9%. And then we got the 30-year off 1.15%. We know they do some paper out there. And number 1 is the old school Ultra off almost 1.5% out there. And Virginia, since we have you joining us on the show today, it's funny, you come on this weekend, it's not a ton of ags in our movers and shakers, but in the previous weeks that they have been lighting it up. So let's hang our hat out there first.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the world of ags. You guys know where to find all this activity for yourselves. Go to cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Both of those should get you to our This Week in Futures options reports. Then go to that drop down there. You'll see a bunch of different choices there. One of them right at the top, pretty easy to find, is agriculture. Then click on that, and we shall begin our journey there. Now, Virginia, I know this is your bailiwick. A lot has been happening in ag since the last time we chatted here on the show. So catch us up. What is lighting up your tape in the world of ags these days?
Well, I think that what's important to know is that we are experiencing the August doldrums. Okay. And that's why the performance, all the ags are kind of right in the middle. Nobody has really liquidated all their open interest. So we still have some big time open interest, but everyone's waiting. The crop's not quite finished and we haven't been able to start harvest yet. But we are in a particular interesting point just today, because tomorrow is September expiration. And whenever we get close to an expiration and there isn't a lot of news to drive the market, what happens is you start to look at the open interest on these options, and they become like the magnet and start pulling the futures right to that price. And that's really what we've been experiencing all week. And that's why we're looking at corn at the 550 level. We're looking at wheat in the 730, 740 area. Even beans, they dropped below $13, but $13 strike had huge open interest, and it pulled that market right back. So now everyone's just scrambling to kind of roll over their straddles, get out, start to move now towards the just to the harvest month, when we have November for soybeans and December for corn and wheat. That all being said, everyone in the U.S. knows that we are experiencing a lot of hot and dry weather, sometimes too much rain, not any rain enough west of the Mississippi. That's making things a little bit more difficult. Although I will say that somebody was talking about corn earlier and saying the corn west of the Mississippi is terrible. But I did watch that Field of Dreams baseball game, and those corn stalks were about 50
that all looked pretty
tall.
Good to me. I watched that game as well. I'm assuming they were all planted right before the game to look nice, but still, you're right. It looked good. Looked pretty good.
I almost said, what was that they're walking through? Yeah. So that just kind of tells you that, it gets spotty here and there. Okay. All that being said, there's a lot of managed money that's still in the commodity market and in the grain specifically. And they're waiting to see if at the end of the crop year that we're going to have one more spike. And let me just say this, none of the farmers have sold anything. And now we're experiencing these doldrums. And what's happened is the volatility has come way, way down. Even the skews, the out of the money skews have come down, but the open interest is still there. So there are some opportunities to do perhaps some backspreading, or even just taking a shot that the market might have one more push to the upside to try to take out the highs before, we really start to settle into, the harvest lows that we normally get into. But that's just something to kind of to be looking at. We've got, crude has been up. Of course, we saw that. One of the reasons even that lumber is up is because it got oversold and then it came right back. And with the logistics problem we had about 6 or 7 months ago, that got so many people involved in lumber. So even though it came down it took the elevator down pretty quickly, there's a lot of people involved in the market. And so it ramped back up. And I think that's why we're seeing a lot of performance just on that level alone.
I'm glad you brought that up, because I wanted to ask you about that, because we have seen lumber, this week it's performing, but in months past it was outperforming Bitcoin. I mean, it was just insane. The meme going around was that dead trees were the hottest new thing on the planet. Forget crypto, forget everything else. It was all about dead trees. And people were hitting us up all the time saying, hey, break down lumber on the show. And it's never really been a big options story. So it's kind of hard for us to parse. But I was curious, for you out there spending your days mostly in the ag markets, I'd have to imagine a lot of new customers were beating down your door, asking about what's going on out there in lumber and potentially even trading it. And it sounds like that was the case, Virginia. A lot of new entrants to the lumber market these days.
It truly was. And it's clearly a supply-demand situation. And of course, we've seen these markets before. And when you have when it's kind of a boutique market and the market starts to build some momentum one way or the other, you better get on board or get left behind. And I think that's where it's very fun to just buy some out of the money calls or out of the money puts, but you need to be able to be nimble to get in and get out, just because the market, just kind of flies around a little bit. And since since we've had electronic markets, they all kind of work like that now. Algorithms do have a lot of power in these markets, and the momentum is very powerful. And even though when we're talking about the grain market, some of these algorithms get in there, and even though commercials used to drive the market more than anything, they are not necessarily taking a back seat, but they're not as powerful as they once were. So all the technicals and options and risk management tools are so important right now. You really it's not that easy just to go ahead and just buy some futures and hang on to it. Even with the farmers now, they're starting to buy some puts, trying to ride out the longs, but they're buying puts because they understand that these markets can move very, very quickly.
Is there anything that embodies the old world and the new as much as algorithms out there slinging lumber, Virginia.
Well, you love it if you're on the right side of it, and you hate it if you're not. I mean, that's the kind of difficulty of it. But the only way, high volatility is really risky, but that's where you have the rewards are huge, and that's where the real traders kind of jump in there. And I think that there's a potential. The potential is big, and that's why I'm really glad that you list all the different commodities out there and indexes that can really move the market. And since the onset in the late 70s of all the options across the board for everything, it gives everyone an opportunity to play these markets. And I think that it's exciting, and that's why I love your show.
To be a brave algo programmer, I think, to start diving into the lumber field. Not quite as many inputs as you're probably used to in, let's say, an Apple or a SPY or a VIX. A little bit different marketplace, a little bit more gappy. Brave souls who are venturing out into that space. And clearly they are, because lumber moving yet again. Have you guys, I know the options aren't really there yet, so a lot of you like to play on the options, but has all this tumult, I know from your inquiries, it certainly has engendered more interest, but have any of you actually dipped your toes into the lumber markets, mostly again on the future side right now? Let us know. It'd be interesting to see. Maybe we need a micro lumber contract. What do you think, Virginia? That'll get the retail involved.
You know what? If it did, I wouldn't put it past the market or even the CME to get into anything that's a like a hot commodity of some sort, or that has a lot of interest. The CME does want to jump on it, and Bitcoin is the perfect example. They got in, and then they got the Bitcoin Mini, and they're really making everything available so that you can get more participation, and that really creates the market and creates some balance to it, and gives everybody an opportunity, to participate in, whether you're a commercial, or you're actually an end user, or you just want to be a spec trader.
Now let's see what's lighting it up out there in the world of ags this week. Like I mentioned, wheat tied for the bottom of our dark side this week, off 0.79%. So I think we'll hang our hat out there first. You can find this for yourselves, listeners. Go into the ag drop down, go to grains and oil seeds, then head on into the SRW wheat. You don't really want to hang out in the KC wheat. Not a heck of a lot lighting it up out there. If you did that, you would see that front future at about a 726 and 3/4. Wheat is actually, it was off net from our show last week. Remember, our This Week in reports start from Monday and go through, pretty much have just this week, as it says in the title. Whereas when we look at our movers and shakers, we go back to the end of our show last week. So a little bit of an extra time frame overlap there. From the start of this week, wheat is actually up about 1.75%, about 12.5 handles. So it has been a bullish week, even though net from our last show, it's actually off almost a full percent. And, we don't talk a lot about weeklies and near dated contracts really in the ags. That's usually the domain of the equities and some other spots. And yet right now, about 65,000 contracts going up in the wheat and this week. And so far about 42.5% of those going up in the SEP contract that has a whopping 1 day to go. So a lot of near dated paper going up out here in the wheat this week. Let's scroll a little bit farther out to see if we can find something that has a little bit more meat on the bone here. Tell you what, we'll go out to December because that did about 24%. So roughly a quarter of the paper going up out there in Dees. That future at about a 740 and 3/4. If you're wondering, the vol out there, people have been saying for a while, equity vol is in the teens and looking farther afield for volatility. I've been saying for a while, you could do worse, and maybe take a glance at the ags, and wheat is holding it up here at about 28, almost 29, about 28.80, up about a point out there on the week. Skew wise, we have the puts last week were 2.5% rich, so 2.5% bid over that nearly 29%, which is, of course, the at the money vol. This week, the puts have come in dramatically. They're 7.4% cheap to the at the money, so crushing the puts. The calls last week, 3.8% bid. This week, 7.2%. So lofty bid to the calls, crushing the puts. Interesting. Big move out there in the skew this week. In terms of the action, remember I said this future is at about a 740 and 3/4, so shy of the 7.5 level out there. And we're looking at the most active contract, seems like across the board this week, listeners. Everyone likes the 800 calls. That's pretty much the most active contract in December, the most active contract, it looks like November here, the most active contract here in October. 800 calls across the board. They did, let's see, in Dece, about 3,000 contracts. They're actually technically beaten by about 95 contracts by the 730 calls going out tomorrow in September. But we'll move away from those for a second because I said those are going out tomorrow. Instead, about 3,000 of these 800 calls in December lighting it up. That was the other most active trade, kind of tied for the top spot this week. The most active day was Wednesday, about 1,000 going up, slightly closing, about 800 on Tuesday, and the rest kind of scattered throughout the week. Looks like a lot of back and forth on this 800 strike throughout the week. Let's see. Also, looks like, again, the 800s were pretty active here in October as well. Let's look really quickly, see what the 800, about 2,500 going up out there. So 800, definitely the strike du jour this week. Most of that today, 1,600 of those going up today, 700 on Tuesday. The rest kind of scattered throughout the week. Obviously, we don't know the OI change there because most of that's going up today. But intriguing, 800 strike was where the action was this week. Virginia, is that what you expected, or does that kind of surprise you? And anything else lighting up your tape in the world of wheat this week, madam?
Well, that's kind of what I expected. I think the old analysts had talked about this a couple of months ago about what would be the upside objectives. Now, of course, we're not going to get ridiculous to say, okay, $20 beans, $12 wheat. Those were numbers from back in 2012. But the numbers they were looking for was $15 beans, $7 corn, $8 wheat. And what's happened is in these last couple of months, there's been a buildup in open interest. And right now, the open interest in the December wheat $8 calls is 10,000. And that's the highest open interest of all the strikes for December. So that gives you an idea that people are starting to gauge on where they think these prices could go, and very possibly start to get things moving in that direction. I know that we're kind of waiting to get September off the board right now, and we're trying to get through these August doldrums. But don't fall asleep, because in the grain market, the market can move very, very quickly, and kind of like there's a shock effect with the volatility, and I think it moves much faster than the equities right now, even as high as they are. You just know that, like just a month ago, the volatility in corn was 50%. Wheat was right behind it. Now we've come down quite a bit, and of course you've got wheat at 29%, which is historically very high, but it is well off the highs that we just had about a month ago. So that makes it kind of difficult to say, well, is it time to kind of backspread now, or is this thing going to is it going to sink a little bit further? And of course, there's a little bit of room there for it to do that. But I think that, I won't count anything out right now because just the way the weather is and the way the crops are, everything that's going around in the world, the extreme is the norm. And if you look at that, that will give you just the idea that, anything can happen. Certainly today with the trouble in Afghanistan, I think that kind of put the market on hold a little bit, and it just kind of froze the commodity market here. We've got that expiration tomorrow, but I think that we're going to start to ratchet back up again and get everybody back in there. You have to think that the commodity market, this is the food of the world. And while COVID has slowed everything down, there's going to be some major demand expansion globally. That's going to really, I think, going to pull and open these markets wide open, and we're going to have some a lot more gyrations that we have seen lately. And of course, it's difficult to compete with the S&Ps, with the stock market right now. If that starts to slow at all, you're going to see a major expansion in commodity markets, and specifically in the foods. Interesting.
Some more action on the horizon for the ags, Virginia. You called it here first.
Yes.
Well, I let these questions wait, but this is someone coming in from the live chat. We like to bump the live listeners up whenever possible. And he has a question about ags, so might as well get it in now. Nichols wants to know, how are the fires impacting the new crops and the harvesting of the old crops? And you were joking earlier, Virginia, about the Field of Dreams. Obviously, that's out west of here in Iowa, and even farther west, of course, we're hearing horrible stories of raging wildfires. Our listeners want to know, how is that impacting the harvesting of the old crop and the planting of the new crop?
Well, it is having a huge impact on it. The fires and everything really west of the Mississippi, the fires in northern U.S. and even in southern Canada is a real issue. And I think that what's happening is the hot weather and these fires. We've been experiencing a little bit of like trading fatigue, and everyone's thinking, well, it's kind of digested in the market right here. Specifically, it looks like we're going to have much less, yield out in the fire area or in the area that's just hot and dry. I mean, we have 100-degree weather here in Chicago, for goodness sake. So out in the fields, it's just really, killing a lot of the crop. But the difference is that in some of the other areas on the east side, they're in, east of the Mississippi or in the east states of the U.S., they're able to, really mitigate that problem by growing, the seeds these days and, all the technology in grains, they grow, it used to be years ago that it was only one ear of corn on a stalk. Now you have 4 or 5. So, and then of course we saw the Field of Dreams, right? And that can produce a lot. That all being said, as demand picks up, and this is why our markets are as high as they are. When China last year bought almost our entire crop of soybeans, that just lets you know the gravity of how much China or other outside buyers can come in and really take everything that we've got. And of course, farmers want to sell it. They want to sell it at these high prices, but that will create a squeeze in the market. A squeeze in the market means way higher prices in the futures. And what does that do? That explodes volatility in options. That explodes the skews. And if you're a trader, that's plenty of action and to participate in, and really get some big rewards.
Well, speaking of big moves and big rewards, a lot of people had a lot of rates on the brain this week, and they still do. So I think we'll hang our hats out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. Listening to the show, it's my favorite complex. I hang out there all the time. I'm just joking. Whenever Mr. Rhodes is on the show, though, he does try to lure me to the dark side of rates more often. But it's kind of inescapable this week, listeners. In fact, a lot of the volatility we saw towards the latter portion of last week in equities could be directly related back to some of the concerns over the Fed tapering. And then, of course, we have Powell giving another speech where people are planning him to give a little bit more insight into that coming up tomorrow. So not surprising, we saw a lot of rates dominating our movers and shakers report this week. We had the Ultra 10-year and 30-year, of course, and the Ultra bond there on the dark side. We had Eurodollars there on the upside. So a lot to unpack. Let's go out to Virginia as well. I know when you're not fielding calls about the Field of Dreams, Virginia, I know you have folks calling up about the rates these days. They have been moving quite a bit. Powell and his folks over there at the Fed have been doing their darndest to inject a little bit more consternation out there into the markets these days, at least from the hints they're dropping. That's certainly what they're doing. What's been lighting up your tape, and what are your clients calling up about these days out in the rates complex?
Well, I think that they're kind of they're just concerned about what that's going to do with all the markets. Everyone asks, well, what do you think is going to happen, and what should I do? Okay. I said, if I knew that for sure, I might be out on an island in the Bahamas. Well, I will say this, that certainly from the commodity side, the talk from the Feds has really put a lid on the market, and it's really like kind of stalled it out from actually starting to rally. Even though we've been talking inflation, and I think that the grain market has been really inflationary for the past year, and no one's really talked about it because the stock market's been going crazy. But I will say that, with the strong U.S. dollar, that really kind of hurts the market. And I think the uncertainty of it all, everybody is thinking about, well, if they're going to taper it now, later, will it really have an effect on the market? And I feel like that it's already kind of digested into the market already. So, it's only going to be surprises that will move the needle. And then when the needle gets moved, it really is just for a little while until everyone's trying to project into the future so much that you've got it's got everybody kind of like jumping the gun a little bit early. It's a little bit like running these long races that they go, oh my God, the pace is set so fast. Well, that's a little bit what's kind of happening now in all the markets, and even now, and specifically even with the grain market and with some of the other markets, everyone's pushing out what their ideas or what their projections are out to 2022 already. People are already talking about what's the harvest going to be in 2022, and we haven't even got this harvest out of the ground yet. So I think that that's going to be such a difficult call because you're going to get everybody in the market. The beauty of that from our standpoint is that the more people you have participating in the market, the more fluid the market becomes, and then everybody hangs on all the technical numbers, anything fundamental coming out. Certainly, where is the managed money going? Everyone's trying to. They have to. They have their rules and regulations they have to go by, and then certainly, speculators jumping in and jumping out really start to push these markets really all over the place.
Yeah, people have much more longer-term focus these days, which is interesting, which is why maybe the 30-year is popping up onto our radar. We haven't had a chance to look at the longer end of the yield curve in a while, so maybe let's hang out there next. It's always fascinating to see what's going on a little bit farther out past all the noise and drama that's bouncing the front end of the curve around, see what folks are doing out a little bit farther out down the curve. Coming into showtime, we see the 30-year. By the way, you can find this for yourselves, listeners. Take that drop down, get out of the ag, go on out to the interest rates complex, and then U.S. rates. And then you'll see the 30-year right there. Click on that, and you're off to the races here. You'll see that front future at about a 164, almost even out there, off about little over 1% on the week here. Pretty much in line with about the numbers we were quoting from the end of our show last week there. And in terms of the action, looks like 41% of it coming in the October contract, even though surprisingly a hefty amount of paper, 35% also going up in the SEP contract that's going out tomorrow. So 1 day to go there. Obviously a lot of closing paper, but still that's a lot of near dated paper for the 30-year. You don't often see that. We're going to hang our hat out there in October. 41% of the paper going up out there. Let's see, coming into showtime, again, 30-year not known to be a bastion of high volatility. Still, it's closing in on a 9, 880 or so, up ever so slightly this week. So an almost 9 volatility, that's nothing to sneeze at in the 30-year. You're getting some other portions of the curve, you're talking 3 to 6 range. So almost a 9, that's actually not bad. In terms of skew, last week we saw the puts at about 2% bid to that already decently high, almost of a 9 level on the at the money vol. This week, the puts have come in a bit. They're about 1% bid to the at the money. Last week, the calls were cheap, 0.4%. This week, 0.6% rich. So they swung the other way, which is interesting out there. So a little bit of a bid emerging for the calls, if ever so slightly. And in terms of action, the number one contract, remember I said we're at a 164 on that front future. If you go on out to October, it's at about a 162 and change. And so not surprising that it's the 160 put that is leading the dance out here this week in October, listeners. 27, almost 28,000 of those on the board. By the way, if you're wondering how much paper the 30-year does, about 427,000 contracts exactly on the tape as of a few minutes ago. So a pretty active contract, and obviously more numbers going up this week. 27, almost 28,000 of these 160 puts going up. The lion's share was yesterday, nearly 17,000. Of that, slightly biased towards closing. So actually a lot of back and forth there in that 17,000. Nearly 10,000 going up today as well. So you're talking yesterday and today. You got almost all of that 27, almost 28,000 went up yesterday and today. You got about 1,100 or so scattered amongst Monday and Tuesday out there. So all the action in the latter portion of the week out there. Right behind it also were the 163 puts. They did 30 contracts less, 27,963 to be precise. A similar pattern there as well. Yesterday was a big day, 19,300 going up yesterday, about almost 6,000 today, and the rest scattered throughout the week. A little bit more bias towards the opening front there yesterday, though. Of that 19,300, almost half, 8,001 to be precise, were opening yesterday. So a little bit more opening paper on the 163 puts than we saw on the 160s. That's interesting, but a lot of action. You could pretty much have a hefty put strip in October was leading the dance here this week. You also saw the 161s, nearly 26,000. And again, of that 26,000, 21,753 went up yesterday, and 15,000 of that was opening. So a lot of opening put paper yesterday here, pretty much across the board here in October. Let's look really quickly to see if we see any other aberrant prints out here. Again, a lot of action going out this week as well. 165 calls were the name of the game on the SEP contract. Those nearly 22,000 of those, again, those are going the way of the dodo tomorrow. The big day was yesterday, about 11,000, and about 6,000 on the tape today. So near-dated calls and then longer-term puts seem to be the order of the day out here. Virginia, you get a lot of calls these days out there on the 30-year, and if so, what's been lighting up your tape out there?
Well, sometimes we get a little, interest into exactly like what's going on with that. Is that going to be a little bit of a tell as to, where the market's going? But clearly with what's happening with the Fed, everyone is worried about the debt. And of course, when you see the bond prices at, like the 30 years specifically at 164, it just seems to be an astronomical number. And that's why volatility at 9% is not a surprise, just because it's gotten so expensive. So sometimes it's kind of hard to gauge. Although everyone has to use these options to kind of protect themselves in with all the managed money, with all your all your investments. Everyone's kind of like thinking that, well, maybe we kind of got to the tippy top here and we might just start to slip a little bit. But I have to say this, that every time we think about that, everyone who started to bet against it kind of like didn't do well. So I just tell them, just be very careful and be nimble. This isn't a thing that you're going to just invest in and walk away and forget about, because we've got a lot of action in these markets, and certainly in the bond market right now with the way the yield curve is. It can move so quickly with everything that's going on in the country. Think about this. We have if the Feds decide they come back and decide next month, okay, well, we've had a change of heart. We're going to start to raise the rates, and we're going to start to do things like that. And now all of a sudden, it'll just be a major scramble across the board, and certainly across all of the bond markets. And I think that it might create a scare for everyone.
Well, the Fed has certainly been scaring a lot of people, not just in the rates complex, but as you mentioned, also in the equities. So let's hang our hat out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities, a portion of the show where we break down all that action on the vol and on the equity side of the space. You guys know where to go if you want to find this for yourselves. Go back to that drop down, go up to equity indices. We're going to hang our hat out there in the Russell 2000 first. And by the way, you're talking equities, of course. The flip side of that coin is volatility. And we had a lot more of it on the tape this time last week than we do today, though, of course, today's sell-off mitigating that somewhat. And we'll see if this continues and see what Powell says tomorrow. We may have more vol back on the tape tomorrow. We shall see. But as of today, coming into showtime, we had RBX, which is, of course, the VIX of the Russell 2000, at about 25.5. So back down below, but we're just a tick north of the 30 handle last week. Listen, on the heel of all the sell-offs and the concerns over tapering, we saw small caps getting bid. Vol was bid pretty much across the board. So RBX giving up the 30 handle, but not retreating too far back to the mid-20s. It's not like it's threatening the 20 handle again. And again, if today's activity is any bellwether, we may see more of that 30 handle before we see a 20 handle again. VIX cash coming into showtime is a little bit north of the 18 handle, about 18.15. That puts it down almost 3.5 handles from this time last week. Remember, we had some lofty vol on the tape last week. VVIX, which is the volatility of volatility. Remember that. Listen to that number, listeners, when we're asking you for our other polls and questions of the weeks about what's more volatile, this product or that product. Remember, when we throw VVIX out there, that's actually the volatility of VIX itself. So pretty volatile beast at about a 114, almost a 115 today. That's still off 15 handles almost exactly from this time last week. We were hanging out around 130 last week. That tells you how volatile volatility is these days. Vol Q, which is the at-the-money vol of the NASDAQ 100, a little bit north of a 16 handle. That puts it down almost 4 points from this time last week. That puts that VIX to RBX spread, so the large cap to small cap vol spread at about 7, almost 7.5 handles, about 7.4. That's a little bit over a point wider than this time last week. And the VIX to vol Q at about a 2. So that's the NASDAQ, the S&P 500 vol spread, about 0.5 point wider. Speaking of vol Q, actually, we had Scott Nations on our pro Q&A session earlier this week. He's, of course, the creator of vol Q out there. He tweeted out this right before the showtime. He's been watching this ratio as well. He said the vol Q to VIX ratio is in the lowest historical decile. That's a trading opportunity here to spread vol Q futures at CME versus VIX futures. He did also drop some hints if you were listening to that pro Q&A. If you are in the secret club, listeners, if you're not, check out theoptionsinsider.com/pro as the place to go for some great Q&As like we had with Scott Nations this week. He did drop some hints about the opportunity for some vol Q options coming, he thinks, before the end of this year. So all of you who would love to trade that spread, I should say, using the options, you won't be stuck with the futures for long. Hopefully the options coming soon. So a lot of action out there on the equity and on the volatility front. I know Virginia, when your phone's not ringing off the hook about all things ags, probably getting a lot of calls about equities and volatility these days. What's been light up your tape in that complex lately?
Well, there was just talk. I think there was a surprise, the surprise comeback in the stock market as a whole. You know, there were got calls about the ES. They're like, hey, what happened here? We thought that the sell-off had begun. I said, yeah, you got to be careful with that sell-off. And of course, even this week, Monday, Tuesday, Wednesday, we've made a new high every single day except today. A little bit of a sell-off, but I think there's some outside influences in this market here. I wouldn't be surprised if we turned around and even made another new high tomorrow. It's just too difficult to bet against this market right now. And that's why you're seeing like the put skew is just, astronomical. And that's just the nature of the beast here. Now, that being said, there are some opportunities out there. I mean, I know, doing, writing covered calls in any of the stocks that you have. I mean, those are pretty solid. I think that you'll be able to just, kind of grind it out and kind of take it in. Right now, it's the market's basically going one way. And I think that even though we pull back, 100 handles even in the S&Ps, it's almost like nothing anymore. So it's almost difficult to get your head around how the markets move, and that's why options, I think, are even more important to trade even than the futures. You can really manage your risk a lot better, and watching out for that. To kind of looking at the market, you decide on what you think, what you'd like to do, and there's a few opportunities here with volatility swinging the way it is. Give you a chance to go ahead and buy something a little bit cheaper to put your play on, and that'll give you a little bit more time to kind of to watch it play out. There isn't really anything long term about them to kind of play right now, but I think that there is so many players in the equity market that it makes for a bigger playground to participate in that. And from that standpoint, trading in that market is big. I personally do trade in the ES market myself, futures and options, just even dabbling, scalping just to stay in it. And then doing some options plays, just kind of some short term, just for the week kind of thing, because it's very difficult to try to make a long term play in options in a market quite like that.
Yeah, equities are definitely the domain of the near-dated paper. What did we do before the rise of weeklies, Virginia? It seems like all anybody can trade in equities now is weeklies. And the notion of expiration Friday, it's kind of quaint now, Virginia.
It is. And I never would have thought that, because even when I did start in options at the SIBO, we only traded calls. We never even had puts. And then it was, just the certain expiring months. And now that we've changed, and every week is an expiration, I think it's great. And I think that it works fantastic. And even in the bond market, when they had the flex options, and there's anything that you want to do, there's a way that we can put together. We can put together a product to make that trade. And what that does, that just gives everyone opportunity. to come in and trade it. And so it makes it difficult for any one person to have a handle on the whole thing. So in that way, it kind of levels the playing field, as challenging as that may be.
Well, let's see what's lighting it up this week. Let's hang out first in small cap land. Again, go to that drop down for equities listeners. Go to the Russell 2000. You'll see we're coming into showtime. Nets on the week is actually up, as Virginia was alluding to. We had rallies pretty much until today. 22.10 is where we find ourselves now, up about 44, almost 45 handles. Nearly 2% on the week, of course, since our last show. A little bit of a different story. That's where we have the Russell 2000 up about 4% from this time last week. And, of course, it's all near dated. Week 4 AUG going out tomorrow, doing 33% of the paper. We won't hang our hat out there. Instead, we'll go a little bit farther out. Let's go out to September contract, the monthly September. It still has about 21, almost 22 days to go. 23% of the paper going up out there. Let's see. That's, if you're wondering, the vol out there at about a 21. So obviously substantially below what RVX is pricing in out there. So interesting to see if RVX catches up to that, or if this vol catches up more to RVX in the coming weeks. It's off about almost 1.25 points this week. Skew wise, the puts last week were 17% bid. This week, 15.9%. So coming in a little bit. The calls last week, 11.7% cheap. This week, nearly 13%. So calls getting crushed. Puts getting a little bit less bid this week. And in terms of the action, you guys all want to know about small delta calls. It looks like a lot of the action this week was actually in a lot of puts. 2170 puts out there in September leading the dance this week. We also had 22 quarter puts, which are actually in the money puts and very high delta right now. Also very active out here. So it looks like a tale of a lot of puts. 2210 puts going out in the week 1 SEP contract. A lot of puts, 21 half puts going a little bit farther out in October. Pretty much all puts all the time this week here in the Russell 2000, which is interesting. You have to look pretty far to find any calls lighting it up, and that's would be in the week 2 SEP contract, 22 half calls. Those aren't quite exactly small delta, but they're smaller going up, but not even a ton of paper there. So mostly puts this week. In the money going out this week, and of course a little bit longer term out of the money puts in September as well. And you mentioned the ES. Let's head out there really quickly as well. Virginia, let's go out here again. Go to that same drop down, listeners. Go to the U.S. index. Go to the E-mini S&P 500. I know a lot of you like to hang your hats out there as well. And the same deal here in the S&P that it is in pretty much every equity these days. The lion's share of the action, 26.4% in the contract that's going out tomorrow, the week 4 AUG contract. By the way, if you're wondering, 44.71 coming into showtime here in the S&P. Let's go a little bit farther out to find something we can sink our teeth into a little bit more. Let's go out to the SEP monthly contract. It has about 21, almost 22 days to go. The vol out there, listeners, a comparatively anemic 12 1/4. That's off about 3/4 point. That kind of gets back to what we were saying. You know, the actual realized vol, how much volatility has been exhibited in the S&P these days is fairly anemic. So even at these middling, mid to high teen vol levels for the VIX compared to realized vol, there is still a pretty hefty premium out there. So bear that in mind if you're saying, oh, this vol's here in the teens and VIX is low. The actual vol in some of these contracts is actually a lot lower out there in the S&P. In terms of, by the way, if you're wondering, almost 20% of the paper went up in this SEP contract this week. Skew-wise, the puts were almost, wow, this is a hefty bid, almost 30% rich to the at the money. That shows you how much interest there is in these puts right now, listeners. My goodness. 30% last week and 36.7% rich. They're even more bid this week, talking nearly a 40% premium. Granted, that at the money vol level is pretty low, so that's going to account for some of that differential. But still, that's a hefty premium for the puts, listeners. You got to want it at this point. The calls last week, 18.5% cheap. This week, 20% cheap. So calls getting cheaper, puts getting more bid out here. In terms of where the action was, the most active contract was the 34 half put going out tomorrow, with about 22,500 of those bad boys. So those are pretty small delta puts. Those are, about 1,000 points almost exactly out of the money. Be interesting to see what it would take. Powell would really have to spook some people to make those puts play out by tomorrow's expiration. Right behind it, we have the 4,600 calls in September, doing about 19, almost 20,000 contracts. By the way, if you're wondering how much paper goes up in the E-mini S&P options, about 1.5 million contracts. So a pretty robust product out there. We can spend the rest of the show talking about all things E-minis, but I want to make sure we get some of you folks on as well. So without further ado, let's get to a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. This is, of course, the portion of the show where you guys take the reins, your questions, your comments. Sometimes we turn that spotlight back on you in the form of our question of the week. And we have done that this week. In fact, we did it last week too, and I want to make sure we pay that one off first too. So really quickly, we were talking last week about volatility. We said everyone has volatility on the brain these days, but which product holds the volatility crown? We asked you quite simply, which of these has the highest 30-day volatility? No cheating, use your gut. And we gave you 4 choices: Bitcoin, VIX, crude oil, or Tesla. Remember what I said earlier about VVIX? Because exactly half of you, 50% of you, chose Bitcoin. And I get it. Bitcoin is kind of synonymous with volatility these days, and only 21.1% of you chose VIX, 15.6% of you said Tesla, 13.3% said crude oil. And the actual answer, remember, as I said it earlier, the VVIX is lofty, is VIX. When we posted this poll last week, the actual VIX 30-day at-the-money volatility was 105%. That beats Bitcoin. That was at about an 85%. Beats Tesla's at about a 40, almost a 41%. And WTI is at about a 35%. So you guys chose Bitcoin, but the answer was pretty firmly in the VIX camp. This week, we have a volatility-related question. I'd love to get your thoughts on this as well, Virginia. We're asking you this week, we said we've seen a lot of turbulence in the market recently. What do you feel is the main driver of this latest round of volatility? And don't see your choice. You can always reply with your DM with your answers, alternative answers. A lot of you have done so. We gave you 4 choices this week. Said the Delta variant, Afghanistan, the tapering concerns by the Fed, or overall general market valuation concerns. And Virginia, again, I'll be curious, get your thoughts on this. If you have a vote in this poll, have at it. And then more importantly, what do you think our audience is voting for?
The audience. Yeah, it depends on what they're thinking. It's kind of interesting to me. I would have said that it really comes down to the Delta variant, and then everything else is kind of a ripple effect. Afghanistan doesn't look good on television, and maybe it might pause a few people, but the Delta variant as a whole, I think, is affecting not just the U.S. economically, but worldwide economics. And by that, it then starts to drive a little bit of, what are we going to do with inflation? What are the Feds going to do? And I think that that's the number one thing that's actually driving it.
Interesting. You probably make the argument that Delta variant is some combination of most of these others, maybe outside of Afghanistan. Delta variant has something to do with all the rest. But right now, it's the Fed. Fed tapering concerns, 54.1% of you saying that. You could, of course, argue one of the main Fed concerns is the Delta variant, so it's kind of hard to divorce these. In fact, many of you have written in saying we should have an all-of-the-above choice. And yeah, I wish if Twitter allowed us to have more than 4 choices, probably would have put that in there as well, even though it's a bit of a cop-out. I want you guys to choose this week. So 54.1% of you saying it's the Fed, 20.4% saying the Delta variant, so lower for the Delta variant than I may have thought, 14.3% saying it's valuation concerns, and 11.2% so far weighing in for Afghanistan. You got about 24 hours or so to get in on this one at Options over there on Twitter to make your voice heard. Well, let's have a couple of questions here from you guys. You already snuck Nichols in already with the fires question. A lot of Z handles today. Meets with a Z. He wants to know, what's the deal with the FX complex? Why does it do so little volume? Yeah, we just talked about it earlier in the show there, Meets. We had the peso on our dark side movers and shakers. The first time we've seen FX on our movers and shakers in forever. So I was hoping to be able to squeeze it in today, but it did 215 contracts this week. And that's kind of emblematic of most of the FX complex. You get outside of Euro USD, Pound USD, a few of those kind of big dogs over there, the volume really falls off of a cliff. And part of that has to do with the fact that the volatility out there. I mean, outside of, you have these crazy black swan events every now and then, like the Swiss franc and a few others that kind of drive a lot of headlines, and Brexit a bit as well. But outside of that, there isn't really a lot of volatility to be found in the FX space. So as a result, volatility is kind of the lifeblood of options trading. If you don't have a ton of vol, then it's hard to really drive a lot of options stories for traders and narratives out there. And so as a result, it doesn't really translate. And of course, for a lot of the audience of this show who are coming in on the retail front, a lot of these FX products, in terms of the spreads and what's driving them and triple spreads and things like that's a little bit obtuse for them. They have a hard time sinking their teeth into that as well. It's easier for them to understand, let's say, a WTI and an OPEC and that relationship versus what's driving the peso versus the dollar right now. It's a little bit more opaque for them. So I think it's a combo of those two things, and that's unfortunately, I wish we could squeeze more FX in. There's just isn't a lot of really stories to parse there. I wish there were. And last up here, we got Alan here, Virginia. First off, if you have anything to add on the FX option space, why it doesn't do any paper, have at it. And then B, Alan wants to know, is there one ag that you feel is most appropriate for new players in that market? We get this question a lot, the new entrance question. So if you have an ag to recommend for Alan as well, Virginia, have at it.
Well, I'll say one thing about the FX options market. It's really a boutique options market, and that's where even in lumber, it's the same kind of thing. It was a boutique market. You didn't even think about lumber until you had this issue, and at some point in time, that's going to go back down and go back into the closet for a while once things get to settle down, and that's exactly what's happening in FX. And I think in the grain market, the one market that as a new trader to get involved in would be the corn market, just because it's just more fluid. There's just much more participation, and it helps you in case you get stuck into something. There's always someone to take you out of it without completely, taking your entire account down. So I would always tell everyone to get involved in the corn side because it's fluid all the way through into short dated options, everything. There's always something to trade in it. And I think that it's kind of the leader of the market too. It's such a behemoth of the grain market that's really the one to participate in.
I can't argue with any of that. Well said. Corn is definitely the go-to, does the most paper at about 336,000 contracts right now. As she mentioned, also some volatility to be found. So all of you out there in the equity landscape, maybe you're saying, oh, there's S&P vols at 12. What am I going to do with that? Well, corn vol right now at around a 30, depending on where you're looking. That front contract, about a 31.5. You get a little bit farther out, you get to about 25.5 to the 28 or so. You get out to, October, November, that time frame. So a little bit more vol to be found. And as Virginia mentioned, a little bit of liquidity. So if you are intrigued, just remember, the skew is going to be a different beast in the ags than it is in your equities. But if you can wrap your head around that, you could do worse than at least keeping an eye on and maybe dipping a toe into the corn market. That music means, unfortunately, we are done for another week here on TWIFO. Of course, we'll be back at you tomorrow, noon Central, 1 p.m. Eastern for vol views, and, of course, after that for options oddities. But before we go, let's go back around the horn. Virginia did an able job filling in on the hot seats again today. If folks are intrigued, they want to reach out to you, ask questions about ags or any other markets, where should they go? What should they do?
Well, they should go to virginiamcgathey.com, and I will be there to answer it. Put your questions in there, and I'll get back to you on them. There
you go, Virginia McGathey. That's MCGATHEY.com. CMEgroup.com is the place to go for your questions on ags and everything else under the sun. Lumber, field of dreams you want to know, hit her up, VirginiaMcGathey.com. You know where to go for all these reports we're talking about here throughout the show, CMEgroup.com/TWIFO or /TWIO. Again, these reports are not just live during showtime. They're live all week long. If you want to check the corn reports at, let's say, Friday at 3 a.m., no one's going to judge. Head on out. It's live. You can check it out for yourselves over there, CMEgroup.com/TWIFO. And of course, you know where to go for all this data we're talking about on small cap volatility, small cap versus large cap, impact of the Delta variant on volatility, and a whole bunch more. FTSERussell.com, FTSERussell.com is the place to go. Give them a follow on the old Twitters while you're at it. At FTSE Russell is the place to go. We got to go on out of here. We'll be back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And then for all you folks in the secret club, 2 p.m. Central, 3 p.m. Eastern for options oddities. Then we're back again next week with another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.